There's so much goes into research in real estate. Tell us, what is Microburbs, and what were you trying to achieve when you first built the research centre?
Yeah, so Microburbs is all about finding the real science behind how we understand suburbs. So when we first started, suburb data was very high level, suburb medians, not much depth. So what we're about is breaking it down into micro markets, into streets, into pockets, so they can see why one area is growing faster than another, and doing primary research to find what are the true drivers of that. So it's really about giving investors evidence instead of just opinions. Like you mentioned there, a classic mistake that investors make is they look in their own backyard. They love the area. The people they meet in the area also like it for the same reasons. And so they'll invest in that. And you have to cast a wider net. There's a lot of suburbs out there, 15,000 of them. But like you say, that could very easily lead to analysis paralysis. So people are lost with all of the data. So our job is to make it clean and simple and focus people on areas that we can prove to the degree that we can that they will actually enjoy above market capital growth.
So, Luke, for everyday buyers and investors, how much does Microburbs actually work behind the scenes?
Yeah, so behind the scenes, we are gathering data from all kinds of weird and wonderful places, individual listings, lots and lots of individual granular data, and building it up into this beautiful data source. And then we're running research on that and then highlighting for people the real indicators that actually do matter, not just ones that people say are important, but we can prove that are actually really drivers of keeping tenants and getting yourself capital growth so that you can build the equity you need so that you can go and get another property.
Yeah.
Awesome. Do you come as a data person or an investor?
Oh, very much a data person. So I've got a background. I've been coding since I was 5. We hire data people and so it's very much data people doing real estate rather than real estate people doing data. We love real estate, obviously. It's just so happens that that's the area where we can provide the most value because it's the biggest decision people make in their lives. And it's very much unregulated and there's a lot of emotions that get in the way. So, it's very much data and science for us. I mean, obviously we get opinions on things, but they're more just like to help us remember and to provide understanding on what's coming out of the raw data. So it shouldn't be about my life experience, in my opinion. It should be about what we can actually prove. And it's much less about what's being said in the real estate market. So we're not going to produce an indicator just because people talk about it or it's accepted wisdom. There's issues with relying, so that a lot of the base knowledge of the real estate market comes from the US, but they're not a supply constrained market like we are. So there's different dynamics going on. So it very much comes up from the data, and the data tells us what to surface and what to emphasize.
Must be hard not to invest in every area that you see as a green light to invest in.
Yeah, except the business is growing fast, so I'm very happy to be investing in Microburbs. That's quite fine.
Now, Luke, you said there were 15,000 suburbs and you're using thousands of data points per suburb. What ones do you think are the most influential in predicting future growth?
Yeah, absolutely. So the most influential is price, and price. So price predicts price, but the biggest thing that people don't understand is that mean reversion. So markets they overheat all the time.
Yeah.
So if there's been a lot of growth in a suburb, you should get out. For a lot of people, that's confirmation, particularly first-time investors. That's confirmation that there must be value. And they imagine that momentum goes on forever. But in reality, properties will fall back, markets will fall back to the overall growth level for the region and for the country. rather than it's not like some regions shoot off to the moon and others go to zero. They're all kind of moving along together. But so yeah, this is something that's come up, just creating bots to go and trade property for themselves. This is the top thing that they look at, is just pricing. So bots are very good at working out exactly what the price should be. Humans are a bit more like thumbs up, thumbs down. This feels good, this doesn't. Whereas a computer can be more, just AI can just be more like, I feel that this is worth 625 and not 695.
Interesting that. Let's maybe dig a bit deeper on that, because a lot of people, well, especially residential properties to buy their own home, we're using emotion a lot of the time. And investors get caught up using emotion, like it or not. Your bots, as you say, are totally emotionless. So you're just absolutely looking at the data and the research. How does that, I suppose, how do you break down the fact that, all right, I went to auction, I want to live in this house, I want to live in this suburb, I've paid 50 grand too much for this property, but I'm okay with it because I'm going to live there for the next 20 years?
Yeah. Okay. So if you're describing a home buyer situation, it may be that there is really something that you will always have, that you will love, that will make it worthwhile. So that's more of a consumption decision. And we can certainly provide a lot of livability data. So that's perfectly fine. Just keep in mind, though, that if you're paying 50 grand too much, that's 50 grand less equity for whatever you want to do later in life. Do you want to get a investment property, and that's going to compound over time. So even though you pay too much, the property will still likely grow in a supply constrained market like Australia. But that 50 grand is going to be worth more and more as time goes on. And so you want to be, regardless of what you want to do in life, you should be building equity if you want to retire early, if you want to get into the real estate market or whatever. So yeah, it's crazy for anyone not to be thinking about what the true price is. And another point on that is, you may be falling in love with something that other people don't value that much. Yeah. So don't pay extra for a bush frontage or a pool, because these things don't really increase the value of a property. They turn a lot of people off. So don't think that you have to pay more for a lot of these extra things. In general, regardless of what kind of property you buy, you want to have things that are going to appeal to everybody. Everybody wants bedrooms. Everybody wants garage spaces. Everybody wants to be near work. Those are the kinds of things. Whereas this emotional falling in love thing can lead you astray from a personal finances point of view.
I'm a sucker for a good kitchen.
Yeah, the bot doesn't care what the kitchen looks like, right?
No.
So post-COVID, we've seen this, I suppose, pattern of, through COVID, people moving out to the regional locations, and then some of that's retracted. What sort of data have you seen? What trends have you seen post-COVID in respect to that? Is that what you're seeing on the ground?
Yeah, so with COVID was a good example of how markets can reset. So we had seen capital city growth, and then suddenly it became all about the regions. So obviously there's a dynamic now where people can work from home. I'm not the biggest, I don't commentate as much on like trends. I don't think anyone really knows exactly where things are. Our focus is more on what can we prove over a long period of time. And there's only been one pandemic. But my hunch is that, and certainly we're seeing a lot of interest in satellite cities, Central Coast, Geelong. So I don't see that going away. Maybe you need to go into work a couple of days a week. As work gets more digitized, as AI comes in, I don't see everyone going back to full-time work personally. But there's it does open up this great big country of ours to lots more opportunities, and the very best opportunities come in quite small places, actually. So like the model that we built, that could have done anything it wanted to, but the bots that survived and made money consistently do things like buy into small towns, very small towns, too small to have a property industry in, that have been like laggard for a very long time. And then suddenly there's this rubber band flip up, and it goes up and it was able to kind of pick the right time to go in. So it's a little bit like penny stocks, knowing when these things that aren't worth much, suddenly they come back as it resets to the overall market. So I see that as great opportunities in the current market to be looking where others don't in very small places.
And do those places, just on the back of that, need to be in prominent locations, like close to water, capital cities, access to amenities, etc.?
Close to water is great, in general. So we've seen that. So that does help in general. But for this particular trend, in terms of what the bots were picking up, it is not that close. So like over 50 kilometers drive from the nearest major hub. So more than 50 kilometers from Dubbo or, Toowoomba or whatever.
Right. Interesting.
Very interesting. So if someone only had 10 minutes to research a suburb, what do you think they should look at first?
I would look at, so if you believe us and our forecasting model, the easiest thing is to just get the forecast from us. But if you're not convinced yet, like most people aren't, because, most people go to REA and Domain, I would be looking at price. I'd be looking at comparing the price to other comparable suburbs, not just the like suburbs, but also like looking at the ratios. So as you're going further away from town, is it in line with what you would expect as you go down away from the CBD? Prices per square meters should decrease. So because people will move if it's a market's too strong. If there are better options available, people will move elsewhere. They might have a little bit more equity, and so they move closer to town if there's an overpriced suburb further away. Price is the fundamental thing. I can talk about gentrification and all kinds of stuff if you like. That can come. I don't know if that's coming in future questions, but
look, you've hit the nail on the head. We're actually going to take a break, and when we come back, we're going to talk about that word gentrification, because it sounds complex, but at the end of the day, it's actually quite simple. So we'll be back just after this.